morning, everyone, and welcome back to another week of Nexus Grain Market Updates. It is May 13th, 2025 at 11:44 a.m. and let's just go to the markets right now. This morning, old crop corn's down 5 cents. We're paying $4.17 to $4.22 across our terminals. New crop corn is down 3 pennies. We're paying $4.04 for new crop corn delivered to the terminal markets here at Nexus. Soybeans are steady. I'm 10.17 to 10.24 across the various terminals. Same terminals for new crop soybeans are unchanged at 9.95 to 9.87. Those numbers right now, as they stand, are down about 12 cents for old crop corn, about a penny for new crop corn on the week. Soybeans have actually rallied considerably. Price of soybeans is up about 31 cents on the week for old crop soybeans. New crop soybeans right now is up about 39 cents on the week. So big gains in the soybean market. Let me go to some of my comments this week. I had a lot going on. I know all of you read the same articles I read. I do want to start out, do a little bit of a dive into the fund positions. We have seen somewhat of a stagnation, perhaps, with the professional managed money. As of last night, this was the first day in about a week and a half that we've actually seen some gains in the net positions of our of the managed money. Number last night that I had short 5,981 net contracts. So while that was a little bit of a reversal, it was the first day of gain, like I said, in about a week and a half. Soybeans have just been kind of meandering along, 31,700 contracts net long. That number was down for the week. It's down about 30,000 contracts on the week. So definitely the professional managed money seems to have lost some interest in our markets. WASD was yesterday, and I want to just give you just a quick overview of WASD. Again, this is the very first of the 25-26 supply and demand numbers. We've been furnished with our planting intentions report, so we pretty much know what the acreage numbers are. So let's just start off with that. 25-26 acreage number for corn, 95.3 million acres planted, 87.4 harvested. I'm not going to grind through the whole report. I will tell you that probably the bigger number, probably the most optimistic one, is the increase in feed usage for corn here domestically. That number was increased to 150 million bushels. So we'll see. Obviously, somebody is fairly optimistic that we're going to see a transition back to more corn usage. Ethanol completely unchanged. That doesn't surprise me one bit. That ethanol market is pretty well maxed out as it is. And the food market off just a pinch, 5 million. So the export number was increased a little bit. The total usage for corn next year here in the United States was increased 220 million bushels. So that translates with our increase in production and our carry out. We did reduce our carry out just a little bit from last year. Right now we're printing 1.8 billion bushels of corn for a carryout. That's certainly at the low end of the number. My personal number was 2 billion, and I know some analysts that are reliable. They had numbers anywhere from 2.2 to 2.4 billion. So we'll keep an eye on that. I think that our corn number may be somewhat low. Corresponding soybeans. It shouldn't surprise anybody that our acreage is down. First thing I want everybody to know, though, is that our corn number versus last year is up about 4.7 million acres. soybean down 3.6. So we didn't exactly have a one-for-one relationship in increase of corn versus decrease of soy. My belief is that most of those acres probably came from wheat. Our soybean number as it stands right now, we're looking at ending stocks next year of 295. That's what's getting behind our new crop soybeans. When you start getting into a carryout number with a 2 in front of it, and I've seen several years where basically we were inside 100 million bushels for carryout, you start you're in a territory where you are in danger. And right now, again, we're a good 16 months away from the that finish line as we are right now, and the market's already responding to it. So there's the read on that. One other little bit that I want to share with everybody, and I've mentioned this to our people, is that the 2024-25 world carryout. Now again, that's what started this whole ball rolling with the increase of the need for corn production in the United States. Was that we are consuming corn at a greater rate than we're producing it globally. Okay, fine and dandy. The 2024-25 corn carryout, 287 million tons. Next year, 277.8. We've lost, or we predict to reduce our global carryout of corn over the trade year, over a 12-month period, by 10 million tons. So that tells me right now today, don't expect to see any kind of a reversal in this corn-bean relationship going into next spring already. I know that we don't even have the crop out of the ground yet here right now, but that's the job of the futures market, is to ameliorate all this. That seems to be the sentiment right now. And indeed, that's what's really gotten behind this bean market. One thing I'll tell you about the soybean market, and I was in that business for a good share of my life, soybeans have a very keen way of defending themselves. There's obviously a much greater export need for soybeans here in the United States than there is for export corn, percentage-wise. And I have yet to see a year where we've literally ran out of soybeans. I've seen some pretty short carryouts, and again, the 200 and some odd million bushel carryout that really got the attention of the trade over the past couple of days. The crop progress report, nothing really amazing to talk about there. We're moving along so fast right now, I don't like to repeat history. As we stand right now, my number is we're across the state of Iowa, we're around 90% finished with our corn planting. That puts us in the mid-range of where we've sat in the past 10 years. So we were not printing anything particularly remarkable with corn. Soybeans are about 80% across our trade territory. I would say that's pretty well going to cover Iowa. Again, those numbers are about in the mid-range. I did share some maps with the Nexus community. Maybe some of you have already seen those online. I know that our marketing department, Chris, who does a fantastic job, put those out online for all of you. And these, what I shared, I'm going to put this up later in the presentation today. Really, what you're going to see are two maps. The first map indicates the percentage of moisture that's available in the top 1 meter of soil. Okay, it's a very good interpretive map. Essentially, it shows Iowa probably in better condition than anybody to the east or the west of us right now. We definitely got off to a real good start with our planting. We certainly didn't have to mud anything in to speak of. And so we're really not going to have the problems this year with sidewall compaction that you would typically associate with a wet planting condition in the spring. So now we're off to timely rains. The second map will show you the anomaly from average, okay, which they seem somewhat contradictory. One of the maps shows a greater anomaly from average than the other map. The other map shows that we are somewhat on the low side of normal. The low side of normal is actually fairly average right now. So as things stand, this shouldn't come as any shock. We will find ourselves, and we're going to find ourselves fairly quickly, probably in the next 7 to 10 days, needing some fairly timely rains. Crop is up, it's looking good. The populations, particularly here where I'm at in Franklin County, populations look exceptional. But indeed, yeah, we're shaping up, certainly shaping up for some need for timely rains this year. I did grab some charts of the net long positions. Soybean market and corn market's completely different. Again, the trade has lost their interest in being long corn. Soy does have their attention, particularly soy oil. Soy oil is the market. My opinion, the past 6 months, oil has really driven the soybean world. The last thing I really want to talk about, I have some fairly interesting charts that I pulled up. The corn chart, which had formerly looked like it was in a environment of consolidation. I'm going to tell everybody right now that we're in a place right now where 435 to 440 is where you're going to find some pretty good support with the new crop corn. Let's take a look at what it's trading at right now. Yeah, 442 last trade with December corn. That number, that number was within probably 2 to 3 pennies of what I would consider major support levels. We're going to have a hard time breaking that to the downside to try to put any pressure on this. Again, we are in a very early stage of our production. We're going to get to kill this crop 2 or 3 times before we harvest it. Yeah, upside potential. I would advise everybody. We really don't have much of a trade range this year. This year, if you see new crop corn values somewhere between 460 to 470, perhaps 475 on the top side, have your offers in with us. We're not going to have, unless we get into some serious production problems. Excuse me. Unless we get into some serious production problems, we're going to have a hard time breaking 480 corn. Soybeans. Soybeans are going to keep in lockstep with the soybean oil market. I'm going to show you a little chart, soybean oil chart. That is certainly a market that has garnered quite a bit of interest, particularly globally, for U.S. soy oil. We are in an environment right now where the 49 to 50 cent crude soybean oil. That number is going to hold up pretty well going forward. So I am fairly optimistic that we're going to continue to see some fairly strong soy prices. That's really about it for this week. I want to thank all of you for your interest in Nexus Cooperative. I want to thank all of you for your business. We certainly appreciate you. We're getting things wrapped up with our spring planting, agronomic season. We're going to be cleaning some bins out and getting into that season. Certainly we're certainly in the last fourth of our marketing season as things go. Keep us in mind. Keep us in mind for all of your grain needs, your agronomic needs as you go forward, feed, energy needs, fuel needs, and your lumber needs. We appreciate you. We appreciate your business. So take care. Goodbye now.